Hello everyone, my name is Lachlann. I write for Monday Morning and I'm also an analyst on Exponential Stock Investor. Now, there are some exciting things going on in the world of markets, potentially concerning as well, but the RBA has just cut rates again to an incredibly low rate, and they're going to engage in quantitative easing to the tune of $1 billion. So what I'm going to do today is run you through three things that I think you should be looking out for in the coming weeks, months, and years ahead. So I'll give them to you straight up at the start now. So there's number one, perhaps going to be a pivot to value picks in the coming weeks and months. I'm not too sure that's going to happen, but I'll tell you more about that in just a moment. Secondly, there could be a sort of uptick for a number of A rates. So these are real estate investment trusts, and I'll look at those, the charts of those in just a moment. And then finally, there are consequences for the Aussie dollar's value, and I'll look at the chart of the AUD-USD pair. So let's dive into the headlines. This first one here is from the Australian Financial Review. So this sort of just summarizes what they're doing, and I encourage you to read more about the specifics of what they're doing in the article, which you can find in the video description link below. So they've essentially cut rates to 0.1%. So you can actually see this is from the RBA's website, what's been happening to the cash rate for a long time. It's gone through a significant slide and is now hovering just above zero. Now, I've previously flagged that negative rates could be in the picture at some point, and this is sort of, I guess, further confirmation of that theory. A lot of people are discussing that. I know it's not a unique perspective, but it's something you should be keeping your eyes peeled for. Secondly, there's an opinion piece from the AFR from Warren Hogan, who discusses how, I guess this is perhaps the interesting thing related to the third point I made, which is that the RBA is now crossed the Rubicon and joined the decade-long global currency wars. So we'll take a look at what this means for the AUD-USD pair in just a moment. But I'll just take you through some of my methodology. So I've used a stock screener here. Now, this is a sort of large cap selection, which I've pulled out from the stock screener. And then I'm looking at monthly performance. So you've got Coca-Cola Amatil here, which has just experienced a takeover bid from the European Coca-Cola organization. So you can understand why there's a big uptick there. There's Link, which I believe also has a takeover bid going through the works. And then there's some interesting companies in here. You've got Lynas, which is a rare earth supplier. So that's intriguing to me. But and of course Afterpay, but perhaps the most intriguing one is what's happening with Lend-Lease. So they've registered a 12% uptick in the last month. So let's take a look at the Lend-Lease chart. So as you can see here, it's in a bit of a range. Doesn't look that exciting, but I guess this recent uptrend could be sort of front running what could be happening with A rates. So I'll just run you through some A rate charts right now. So you've got the SPJ, which is the A rate index on the ASX. So as you can see, it's been range bound for quite a while now. It's not gone sort of outside this 14% range for a long time, but you see a couple green bars at the end here, and I'll just run you through the ETF, which is meant to track the XPJ. So this is SLF, which is another ETF, and as you can see, if you compare the two charts, SLF and XPJ, you can see SLF is actually lagging behind a bit, so that's an interesting thing to note. But I'll just take a look at another A rate which has been going absolutely berserk, which is Goodman Group. So as you can see here, from the March market lows, it's ticked up about 100% to the high there. So they do primarily, I believe, industrial real estate. So we're talking about warehouses and industrial parks, and they've been going quite well. And that's very interesting to see, because when everything shut down, there was this, I guess, shift away from commercial property, and then people got hesitant about even residential real estate. But you're always going to need a place to work, especially for essential services, which could be explaining what's happened with Goodman Group here. Now, I guess once that's been said, I think the rate cut, well, it's designed to, the rate cut and the QE is designed to lower interest rates across the board for all forms of lending. And, well, what do we know about Australia? We know that people love speculating on real estate and land in Australia. So I would not be surprised if in the coming weeks and months you see a sort of glut of buys on A rates as, I guess, confidence flows back into the real estate sector. So that'll be very interesting to watch. It may not happen, but I guess I'll be watching the A rate sector quite closely for signs of, I guess, life again after a long dormant period. And the third point which I wanted to get to was, how's the AUD going? So I've got some lines on this chart. This goes back to about 2017 there. So there's this sort of downtrend here. It punched through resistance at around 70 cents and then broke just as high as about 74 cents. Now, the thing to know about these rate cuts is that they could hurt the value of the AUD, which could be a good thing for the economy. We can export more. So it gets incredibly complex when you bring currency into the equation with central bank rates. But I guess the next thing I'll be looking for is if the AUD can find some support, maybe back at this 70-cent level. So I guess there are a lot of things to watch. And the US dollar is actually quite weak, which you can see in the DXY, but it seems to have found some support. And so it's a strange one. The US dollar is getting weaker and the AUD is getting weaker. So it'll be a sort of race to the bottom in some sense as countries scramble to prop up their manufacturing and their resource exports. So finally, the Aussie dollar could lose some of the steam on this massive run up. So that'll be very interesting to watch. And I guess going back to my first point, I wouldn't say that the value pivot is on just yet. I'll be looking at the charts closely for that. I expect a lot of the momentum in the small cap space to continue for the foreseeable future, but I could be wrong on that as well. Maybe there'll be a renaissance in value investing, but it'll take quite a while for this RBA rate cut and quantitative easing to flow through the system. So I'd be hesitant to say that value pivot is on just yet, but long term, I think small caps are still very exciting. They carry a lot of risk, of course, but if you're interested in small cap investing, I'd highly encourage you to check out Exponential Stock Investor. You can find the link in the video description below. Be sure to subscribe if you like this kind of content, and I hope you have a safe week, and I'll talk to you soon. Thank you.